Client first capital. I understand when it comes to investment, we can invest in real estate property. Very, for example, my wife wants to invest in real estate property. I won't say I don't believe in, but I believe in, like, in terms of percentage. Now you have clarified we should not look percentage. We should be looking into X. But the point is, so we diversify, or are equities safe, or you only invest in equities, or you follow bonds or anything? So all these, I would say, investments, type of investments available in the market. So if a person, I'll break it down. Let's say, so why equities? Are equities risky? Like what I say is, they're high risky or low risk, or why not? Some people say invest in real estate. If yes, if no, why?
So the risk comes from not knowing what you're doing. Anything is risky.
That becomes speculation. Correct?
Anything becomes speculation. Anything becomes risk if you do not understand what you're doing.
Right. Yep.
So real estate, equity, fixed deposit in a wrong bank, or a bank which has a bad quality, or not declaring the right health in the insurance policies, everything will become risky if you do not know what you're doing. Have a checklist for everything. You love real estate? No problem. Go ahead and diversify. Don't diversify. You have to make, it's your responsibility. It's responsibility of all of our audience to make or beat inflation. So 11 to 15%, grow your wealth 11 to 15% across the diversification portfolio. It could be stocks, it could be currency, it could be real estate, it could be whatever it is.
So across the entire portfolio, we
Yes.
should be doing
The
it.
only thing is, don't diversify so much that you don't have time for your children and for your own self.
Okay. Again, coming back to your point, less decisions, right decision, and quality decisions.
Absolutely.
So everything is
And-
linked, I think.
And quality decision means you should have a checklist,
Okay.
because you might be let's say a genius, but genius at the right time, or let's say at the pressurized time, they take wrong decisions.
Okay.
Airplane crash are examples of that. So rule-based life or a checklist to take any decision is absolutely going to make the life game changer.
Okay, there is thing that I've heard in terms of, anyways, I'll come back to the question again later because that's in my list. So there's one question which is left, is that how you view equities as an asset class. Is it like inherently high risk, low risk, or what is your
So
opinion?
as per the definition, you can lose complete capital because you're taking a risk in the business.
Correct.
So if it's a bad business, you will lose complete capital. So from a theoretical perspective, from the financial regulator's perspective, it's a high risk.
Okay, so these are more related to investment philosophies and like what methodologies we should be adopting in terms of fundamentals. So in terms of your portfolio strategy and I would say stock selection, I have few questions with me. So when you as a fund manager looking for investments, so you invest globally, are you limited focus to only US market because you think this market is doing good? Because even in a bad market, a company could do good as well. So how you, when it comes to stock selection, how you identify the stock?
Okay.
Because I believe, sorry, as one question is like, in Indian markets, I know there is more than 5,000 companies. In US, I'm sure more than 5,000.
Yeah.
So out of that 10,000 companies, when you have to take only 10 companies as the decision, how would you, I understand you have 3 parameters and you need time, ample data is there. Then how you identify the stock? That's the biggest challenge I see in myself. If I decide to go as an investor.
I think the answer lies in you itself. The way you call one of the best partners on a badminton Sunday, and if he comes, you love to play.
Yeah.
How do you decide that? Similarly, if you look at the investing or anything, the first reason people fail is when they overborrow or they have debt.
Okay.
So if you, let's say, remove these companies who have debt, from 5,000 companies, you will come down to 1,000.
Okay.
Or let's say 500 actually. Then you will come down to how many of them are making 20% on return on capital.
Okay.
You will come down to 100
Okay.
or 150. Then you will look at how many companies are growing for the last 5 years or 10 years. So 15% growth on their values.
So when you say values or sales?
The sales, not this. When I said the cash flow.
Okay.
So in my terms, it is cash flow. For the audience sake, it is earnings. Now, why I said cash flow, there's a reason. But anyways, let's keep it earnings. Then after that, if you look at how many companies have, because there is nobody makes money for no one. If you and I both make money, we'll work together. You make money, I don't make money, I will leave. I make money, you don't make money, you will leave.
Correct.
We both don't make money, nothing will happen.
Correct.
The only way to live life peacefully and have a great thing is to win-win. And that's the partnership. When we are taking equity stake in a company, we're partners. So now what happens, you look at the companies which have insider holdings, because that promoter is a majority shareholder. If he is driving the business. If he is not making money, I making money is a fluke. And if you do that, you come down to only 70, 75 businesses.
Okay. So filter it down by quality checks. So as you mentioned earlier, we should have a checklist.
Right.
Okay. So that's how you do it. Okay, nice. So again, I mean, one question is that, are you limited to any particular region, or you look across the globe, or Europe?
Okay. So let's understand capitalism.
Okay.
How many stock markets, indexes, now we know indexes, right?
Yep.
Have done well in the last 10, 15, 20 years. So let's say one is New Zealand. Yesterday, I came to know that New Zealand stock market has done well.
India has done well.
India is definitely, so India is the second best, US is the first best, and then let's say Australia is another market where it is done well. So anyone who would like to approach markets, what they should do is look at the index of that country first. Now, why index would have done well? Because probably that country is run as democracy. That's a very important thing.
Okay.
And it has come from the learning from the mentors, like Waters Calls mentioned in his paper that Cuba is a communist economy those days. So I went to Cuba and I lost money. I lost money in China.
Okay.
Now, China is an amazing economy. Today, we have all the products available are Chinese and they're good price, good quality. But is it a right stock market? If you look at the index, it has not done well. Now, there are reasons for it. Let's not talk about that. Now, in a democracy, businessman or a capitalism rules.
Okay.
Like UK, Europe also, it's fine. Now, in that market, start hunting for these parameters. We have on our website 70-point checklist we have on the forensic side as well. The chances of losing money will become so limited that you will only make money. Even if 2 or 3 decisions go right, you will make money. In this business, you have to only be right 4 to 5 times out of 10.
Okay. So you mentioned that this checklist that you follow, that's there on your website. So may I know what's the website?
Clientfirst.capital.
So okay, I'll make sure that I'm adding this to the description in my podcast for my believers. Yeah. So at least this will be helpful for them.
So I'll tell you, Chandan, I just to add here, I think you've not asked this, but the challenge here is that first we, in our heart or mind, we think that I will have a coffee, and then we'll start looking for a coffee shop.
Okay.
So what happens? You're not driven by the best coffee, you're driven by desire to have coffee. So the next shop or the next shop, you will like it. And then you will say, this is a bad coffee because you did not do the research properly.
Okay.
So first of all, leave this idea of that I want to invest $10,000 or $20,000. Let me first find out the best business, learn about it. Then I will think about buying.
Okay. And it could be anywhere.
It could be anywhere.
So, okay.
Now, properties, same concept. Go and see the projects. Learn about the developer. Learn about the quality. Learn the layout you want. Which kind of situation, positioning on the particular, let's say the apartment. So in every apartment, there are a lot of type of houses. Which kind of apartments are rare? In the villa community, which kind of villas are rare? Their proximity. What government is doing towards that community or that business hub. It's a huge checklist. Enjoy learning about it.
Okay.
Don't have a price tag.
Okay. So basically, it's about learning about the company's business And if a business could be anywhere, and if it's fitting all my parameters, I should be investing in that market. Doesn't matter where it is. Correct?
No, the market. Okay, so yes, I'm not an expert of China, but Liu has made money for people in China. So I'll say it is better to be around the circle of competence you have. So democracy is better because you have good information. But let's say you understand China better than me or Cuba. You are welcome. Let me give you one analogy.
Okay.
So 4 months, I went across the market to know a good car, which suits my checklist. Every car I found something or the other, and I was not taking the decision. After 4 months, I said, no problem. I'll wait for this car model if this comes. I am not buying, and I'm very happy because I learned about the Reeve, the HEV, the Fave, all these new types of car, what's coming in the car now, what kind of luxury they're offering, what kind of features they're offering, what kind of mileage they're offering. We're back to 1 liter, 20 kilometer kind of concept now in the luxury car, which an Asian would love to dream. Because if you look at Range Rover, 1 kilometer is 2 liters.
Oh.
That's the mileage. And people still love the status symbol. A person like me who's a value investor will never buy it. I'm encouraged by that ad of Maruti, kitna deti hai. I want the Range Rover to give that mileage. Now people will say, you are an impossible person. But today look, Elon Musk, what he did? The aircraft, not the aircraft, the satellite carrier goes up all the way. Leave the satellite on the space and come back. How many billions of savings he's doing to the earth? Yeah. That's possible. But I dreamt about it. Somebody developed it. After 4 months, what happened? I could not buy the car. And one fine day, I was playing with my friends and I saw a car which he bought 4 months ago. I didn't see the full 4 months. I did not realize. I saw that car and I asked him. He said, it's a very good car. For 4 months, I'm driving it. Then I went to the showroom and did my checklist and I realized 4 months I researched. I couldn't find this car. This man has found it.
Okay.
So sometimes it happens you're not looking at the right place. So please,
right person.
Yeah. So even we think we all have all knowledge, but when you go more deep into it. Now, how did I sell the silver in the right time? I have spent 5,000 hours.
So you were invested in silver.
Yeah. So in our India fund we had silver, and I know people will think it's how does this happen, but we sold at 116. And silver topped at 121, and today silver is 82. So it has fallen 35% in just 2 days.
Oh, nice.
Yeah, so we're lucky. But no, I won't credit anything else. Yes, so it's a conscious decision. It is a thoughtful decision. But I think we all are lucky. If silver went to 150, 160, I'm a fool. So always think that you are not that person who has achieve something. It is all that learning from the mentors has subconsciously motivated you to take a right decision.
Okay.
And even if silver would have gone to 82, which is today, I am still making money because I did not buy at 82. We bought at a much lower price.
Oh, okay.
We protected the profit. So we did not incur the loss in the profit, Chandan.
That's another way. First, you don't lose the capital, then you earn the profit, and you're not losing the profit. That's the game. Yeah. That's the role of fund manager, I believe.
Yes.
So, okay. So that's another reason is giving me that we should approach fund manager and expert if we don't have time to invest to do in the investing, correct?
So, Chandan, it's a time and effort arbitrage.
Game.
Everybody can become an investor. Everybody can become a chartered accountant, I'll say. Everybody can become an engineer. It is just that it's an interest first thing and then the time and effort arbitrage. Why do we exist? Because you outsource your time to us and the effort so you saving your time and effort. And for I think maximum businesses are on this mode. They are saving people time and effort. So when you order something from Blinkit or Noon or Kareem and it comes in 15 minutes, if you look at the arbitrage, you go there, you park your car, order that quickly, and the guests are coming. It is saving you money.
True.
They're doing it at the mass scale, so they can give you discount.
And I can utilize that time somewhere else, which I can do
Absolutely.
better.
Absolutely.
So it's okay. So it's again we came back to value again. We are saving value, or we are making value by saving time by not going there and paying little money.
Right. It's like this podcast. We're trying to reach the audience. One by one, how many people will reach? But this is the way to reach the beyond borders. So this is the new way of franchising, actually.
Okay, nice. So in terms of stock selection process, I have one more question, or I would say two questions in stock selection. So is the approach that client first capital or as a fund manager you follow, is it based on macro driven, like top down, or is it based company driven, and why? And the last question would be about how you determine the position or sizing of your portfolio. So how much money you should be investing in that particular equity or any other product or asset class that you are investing in.
So in general, we take 5% to 10% position. We're a concentrated fund manager
Per stock. Per stock.
So we do not have more than 10 to 11 names.
Okay.
We believe that children and the stocks should be as less as possible, which you can manage. If you have more children or more stock, it is difficult to manage. So that's the ideology we have. Now, coming to why a stock particularly can have 20% or more than 10% in the portfolio is only when that stock doubles on the portfolio and you learn more about the company and you feel that the risk is lower at 20% of the allocation in the portfolio when it has become 2x or 3x, vis-a-vis when it was a lower position, it was a higher risk. Okay. Because you knew the company less. Risk is perceived. For you, stock investing could be less risk. For somebody who's outside in the audience, might be the stock investing is high risk because he has not understood it yet. So this is the one part. Now, as you learn more about these companies, you realize that these companies are an amazing way of making money. One side. The second side is if a company fell further and become half on the portfolio because it's fallen 50%, that company is more risky now. Why it has fallen 50%? What did I miss in my equation? And if I factor in that, there are companies which are 5% in the portfolio, we are not allocating more money. There are companies which are 20% on the portfolio, we are allocating more money.
Okay.
So at 12x of a stock, we are putting more money. At 0.5x of a stock or 50% down, we're not putting more money. So just the fall and the, let's say the growth does not decide anything or do not decide anything. How well I have understood the dynamics. Great businesses can trade at throwaway value. Example, gold and silver 2 years ago was at throwaway values. Who understood it made money. Today, they are not that worthy to buy. But people might have a different thought process. Our thesis says that this is a kind of a peak. You might make 10-20%, but not 300% from here.
Okay. So one question in terms of which was there, sizing. So how you decide when a stock should be exited? You have already answered in a couple of questions. You have given us in, but I want to make this very peculiar because I understand when we invest, we might invest at the right valuation, looking at the quality and the growth and the value. But it is important to sell as well. And you just mentioned that you bought silver at a very good price and you sold at 116 and it made a top of 121 and you made a decision. So I wish you could have shared with everyone.
Yeah, so it's very simple. Anything which is easy money won't last forever.
So you're saying silver was easy money?
Silver, when that price of 25 and 35 was a easy money to make 40, let's say 3x. 2x.
Okay.
But at 116 or 82 now, to make the same money, you have to take silver to 240 or 300. Correct. For what reason? It's a commodity. It's a commodity. Because at 300, you will activate all those mines which were not working earlier because their cost of operation was higher. But anybody who has now $100 cost, he will hedge the cost and start producing silver. So it will not sustain. And if you go and read history, you will find the answer. Coming to selling, Chandan, we are permanent owners of these great companies. It is like asking when I will divorce or when somebody will divorce his spouse. If the spouse is a great person, you will say, wow, This is an amazing relationship. Or an employee is great. You would like to have a partnership with the employee. You want to promote the employee. It is like asking, when will I sell my business? Why should I sell my business when I know that how to run the business well with a less stress, less time, or the great time management? So it is better. Again, it's about taking less decisions. But then you have some cyclical companies. You have some companies which might have become, let's say, matured, and they might not grow to an extent. That is the decision. That is the time to take a decision to exit. And if you look at the same parameter I discussed, you can look at the growth is getting, let's say, stagnant, and then you have something else available, and you probably would like to switch one or two of them. That's one. The second, how do I take a decision to sell, are not sometimes driven by fundamentals. It's also driven by the behavior. So when a stock becomes 50% of the portfolio, stock owns me.
Okay.
So it is better to cut down the volatility of the portfolio, because portfolio construction for the masses is a different way of doing investing. If it is my personal portfolio, it's a different way of handling the portfolio.
Okay. So it's like one of the belief I believe, like if it's better that you are controlling the car while driving rather than car controlling you, but then it becomes more riskier compared to the initial.
It's all risk management.
Yeah.
It's not return management.
My next question is about risk management. But I think one of the important part for fund managers, or maybe as you, is like to manage the risk. And when you say risk, what is risk? Risk of losing capital, or risk of not making money, or what is risk in your opinion?
So I chose a field where businesses bound to make money. Business is there to make money. A business is there to make money. My job is to manage the risk. If you look at any great business, it will bound to go up. But at what price? If that doesn't work, then what? And that is why my job, I'm actually a risk manager. All the fund managers or all the head of the families are risk managers.
Okay.
We run a business where companies bound to make money. If I would have bought a flat as a flat portfolio, it's called flat. Because a flat cannot become a building. It cannot become a restaurant on its own. It cannot become an Airbnb on its own. So look at the greatest company in the world. They don't own any assets.
Oh, okay.
So understand, it's not a commodity. So my businesses are expanding. What they were doing earlier, they're not doing now. If they have 4 mines, now they have 6 mines. If they have 1,000 employees, now they have 1,500 employees. Even we are not same. So I'm not the same person you met 5 years ago.
True.
The team has changed. The thought process has changed. The experience, maybe let's say mistakes have been more. Learn from those mistakes. Things are changing. So the selling decision is purely on behavior, one, and the fundamental of that company might have deteriorated. It may happen, or a better opportunity is available. That is the time you execute a sale.
Okay. So, in terms of, let's say you mentioned that you invest for a long run and few decisions, few stocks or equities in your portfolio. How do you monitor them every month or very regularly about the companies? Or is it like once you have taken a decision, I'll look into it every 6 months? So how does a fund manager manage his portfolio by monitoring? How frequently?
So I go slow on a stock in a portfolio. Very rarely we buy.
Okay.
Once you go slow in buying or slow in taking a decision of buying, I also go slow in taking a decision to exit. And it may be a flawed method, because I might be losing money on a stock and I will still be holding it and not exiting. Now, as I go slow in the portfolio stocks, there are 2 types of stocks in the portfolio. One which have done very, very well and which have done worse. Now I get to know them more, because both are risk for me. It may come down and this may go to zero, because I'm a risk manager. I read about them more. I meet the management again.
When you say management, companies management.
Absolutely. So it is not a game of just doing everything on an Excel sheet or on a computer.
Okay.
It's about meeting those people. If you go to our channel, the one of the 12 bagger in our portfolio, 13 bagger, I'll say. The CEO, we have met the CEO. We talk to him regularly, and that company has been very transparent.
Okay.
A transparent management means he's taking care of the minority shareholder. If he doesn't respond to us, if he doesn't tell us what's happening, why are we investing? We are not investing in dark. Yes, there are certain angles which are not sorted out, which are not solved. But it is the same case with every business.
Okay.
Some questions are always we are solving. Because if everything will be solved, we will be dead.
I think this is another. I mean, I had never imagined that you were not you. I mean, as a fund manager, I don't know whether other managers also do the same. But this gives you an edge as well in terms of understanding the business more, rather than a person who is just looking at the few reports and financial metrics.
So then it is the same thing. Like when you want to invest, you want to see things. Even the
Yeah.
Zoom is there. You might start on Zoom, but you still want to come physically and see, meet the other people, read the show, then ask 10 other people, and then take the decision. And we also do the same at a different pedestal.
And plus, personally, we are learning from the business, from the person who is running the business, so he knows more and more.
Absolutely.
Of course. It makes sense. Another question which I have in my mind is, I've heard a lot of time that market is more about psychology. Why people say that?
Life is all about psychology.
Why?
Everything is driven by the mind, right?
Yeah.
So what is profits? It's a healthy state. For somebody, profit is their children's smile. Somebody, the profit is that coffee or the beer they have after they finish the work in the restaurant. They go and they have one beer, and then they go to the bed. So, if you look at the whole world, the way whoever made it, I call it God, Krishna. It's all about mind. Even the Bhagavad Gita is all the biggest psychology. Even sales, for that matter, is psychology. If your psychology is better, people will come to you. If your psychology is third class, people will not be with you.
Okay.
So psychology is the second name is behavior.
Okay.
So if you read that book by Art of Thinking Slow and Thinking Fast by Daniel Kahneman, he's got the Nobel Prize in the finance, but he is a psychology professor.
Oh.
In the economy he has got. How is that possible? And that's a deep subject. I teach that subject called behavior finance.
Okay.
And there I got introduced to somebody called Charlie Munger. It is easier to understand investing. It is difficult to understand behavior.
Okay.
And after understanding Buffett, it took me 4 years to understand Charlie Munger.
Okay.
Charlie Munger donated his wealth while he was alive. That's a big decision. And Buffett always regarded him as the father figure and the elder brother. So psychology is very important, Chandan.
But how does it play a role in the markets, in the investment?
Yes, so if you look at yesterday, I think the portfolio fell $4 million. Do you see anything on my face?
No.
So this is psychology. Now, you know that this is part of the game. You know that you can take this risk. Even if the portfolio falls 10 million in the next week, I am fine. People ask me, what's the drawdown on the portfolio? I said, 100%. Now, if I am practicing Buffett or Ramdev Agrawal or any great investor, I need to know him in detail. Life is a natural flow. People have this problem of health. When we play to the sport, sometimes our shoulders are not right, sometimes our legs are not right, and we take a back seat and come back. And we again play a game. We again go back. We again play a game. Every time we come back, we improve. I think you also take some training on the badminton side.
Yeah.
That coaching is what you have to do. So that Bhagavad Gita is that coaching on the behavior side. You have people who have been in the market for 30, 40, 50 years. Not necessarily Buffett. So in the gold mining, we have different Buffetts. So every field you have a master. You will be surprised to know that the company which we own in the gold mining side, the CEO is a follower of Elon Musk.
Okay. That's
So
surprising.
a gold mining company is following a tech billionaire or trillionaire because he is guiding them how to achieve impossible.
Nice.
So take the best from everyone and live a good life. That's the whole thing. So psychology is very important. And first of all, you need to understand your own psychology. That's
Okay.
the most important thing.
So once you make the decision, so you should stick to it if you don't see anything, even if market is behaving otherwise. Correct?
It's not about the market.
Can we say that as a side?
You should be ready to change if the facts have changed, not the market rumors. Silver and gold have now fallen. We were discussing when we were coming and we're talking that I am losing money. The discussion should be, oh wow, this could be a time to get in more. And that is going on in my mind right now. So Buffett says, when the market goes down, I'm happy. So when market goes down, you should be happy. I'm happy. I am
And a
waiting.
real investor is always happy whenever the markets are going down.
Yes,
so-
because it's always net buyer.
Yeah.
If you look at it, all the big investors, they need what, $1 million a year, and they have $1 billion. Will they ever be exiting the market? They will be always net buyer. So a buyer should be happy when the prices are going down.
Okay. So a couple of more questions. Not much. I think I have gained a lot of things today from you. So as a fund manager, I'm working with you. How a professional fund manager can help investors avoiding emotional mistakes? So, for example, let's say if I invest with you or with some other fund manager, can I make mistakes emotionally or psychologically, take irrational decisions? Whereas a fund manager won't make decisions. He's also human. I'm also human. But chances are, like people say, that fund manager won't make that mistakes.
That's
Am I wrong?
Absolutely wrong. So I'm sitting in this position because I have committed grave mistakes as compared to any individual investor, and I have committed
you have
them
grown
more.
money. I have talked to you, some of your clients. Yet you have grown money. So couple of decisions might be wrong, but rest of the decision as an overall portfolio, you have done really well.
Right. And so the idea is, what do I highlight? Do I highlight my returns or do I highlight my mistakes? I need to highlight my mistakes. I need to focus and tell my children and my investors and stakeholders that, look, mistakes are important. In fact, the most mistakes are done by Elon Musk. He was on the verge of bankruptcy. And I cannot take that much of risk. But I can be like Jeff Bezos. I can be like Buffett. So people, and specifically with all due respect to middle class people, they're conventional investors. We're conservative investors. There's a very big thin line about it. Conventional investor does not want to lose capital from the principal. Inflation, he doesn't understand probably, or he needs to understand more. But a conservative investor understand that I am happy to see a downside, but I want to grow at 15, 10, 20% of my wealth year on year on the whole portfolio allocation. So Buffett is a conservative investor. It is the safest way of investing. Like mutual fund sahi hai.
Mutual funds.
Who lost money in mutual fund? Anybody who came and exited next day or 1 year or 2 year have lost money. But if you've bought equity mutual fund in a good country, in a democratic country for 5 to 6 years, you've never lost money.
Okay, which makes sense. Okay. Another last, I would say, second last question is, this is more about personal habits and inspirations. So which books or tools you can recommend to our investors or upcoming investors, new generation, old generation, whosoever it is, that will help them in learning long-term investing and about investments, equity, or be it equity or anything?
So there are two books. One is One Upon Wall Street by Peter Lynch.
Okay.
And so this is an easy book. And the second book is by Pulak Prasad,
Okay.
who's not a social media fan. Amazing man, the way he wrote the book called What I Learned About Investing from Darwin.
Okay.
In fact, he is telling the world about a concept called Lollapalooza, which means the mental model, how the evolution of a species is so similar to the value investing. So in fact, you should be able to download things to people the way they are grown up. Like you're a CA, you'll understand finance terms. But if somebody is a marketing person, will not understand finance. So as a value investor, I should be able to download that for that person in the language he or she understands.
Okay.
So this is that book. These two books are great. But before this, if somebody can read Bhagavad Gita, so that they understand the psychology of themselves.
Yeah.
And then probably these 3 books are enough to have a great life.
To at least to start with.
To have a great life.
See, okay.
One more thing, Chandan. It is not that you should read 15 books one time. You should read one book 15 times.
Okay.
That's muscle memory.
Okay. So, shall we expect any book from you soon or later?
I'm still thinking.
Okay, that's good to know. I think these were the questions that I had in my mind. I think you have answered a lot of my questions, which I believe are common for every investors. But in case if someone still wants to ask you questions, they can, I think, they can comment on it. You guys feel free to comment on this podcast or the video. Plus, if they want to reach out to you, how they can reach out to you.
So I think our problem is we take $1 million now. And there's a very good learning I had today morning that if you are in a business and you're still selling, you're in the wrong business.
Okay.
So now I'm very fortunate that customers are coming by referral. And yes, everybody can reach us. We are happy to answer their question. Our aim is very simple. Please don't lose money in the equity markets because they are not that risky as we think. Don't just start trading. Spend some time in training your mind by the books. Give some exams. There are wonderful institutes. You talk to us about this and we will be happy to guide you. But let's have some 10 to 12 hours of training first. Then start setting in front of system. One more thing, as a retail investor, the more you sit in front of the system, the more money you will lose. You might be an expert, excuse me for that, but at least I believe that I am not a genius. So it is better not to sit in front of the system.
Bhuvan, sorry, you just mentioned one thing. Minimum is a $1 million requirement. That's a huge amount, very honestly. If you ask me, it's a very huge amount. But Bhuvan, you invest in equities. There are ways, if someone has that much, not that much kind of money, but they still want to invest. So if they want to invest with you, if they are very determined, let's say, so is there any type of fund that you are planning to start with that you can pool money from them and everyone can benefit from your knowledge, from your experience? Is there any plan upcoming like that?
See, Chandan, it is there in the card, but not in the near future. But let's say somebody doesn't have $1 million, but he loves us so much. We are happy to help him. It is, so let's understand what's our business. Our business is not to make money.
Sorry, helping means if I put $100K, you will put $900K.
So we don't believe in leverage. But if you start with 100K, we'll take the money.
Okay.
If you do not have $1 million, so we do not want more than 10% of your wealth.
Okay.
So let's say your wealth is $1 million and you love us because we are open, we're accessible, we will be happy to take $100,000. Let's say you want to start, but you do not have $100,000. We'll help you for free. Because at the end of the day, we don't want you to lose money. The second options are definitely ETF and mutual funds. Chandan, we are not in the business of making money. We're in the business of making people retire rich or leave a legacy. Now, the biggest reason people don't make money in the stock market. So you know that formula A equal to P into 1 plus R to the power T divided by 100. The most important thing is people don't make money in the stock market is they don't put in the money, one. And they don't put money for the sufficient time.
Okay.
So our whole focus is to educate, inspire these investors to put in more. So that when you are 50 or 60, and I'm so happy I've reached that stage for many investors, they can withdraw $500,000 to $1 million every year. That kind of rental.
So it's a kind of financial planning help that you are also doing with the to investors.
Obviously,
well,
Chandan, after really we all want to have our passion, but what happened? Just for money, we do something else. So Buffett has a very simple thing that it is like saving love for the old age. So it's very simple that if I give you $500,000 income from your own portfolio every year, probably you will not be working the job you're working.
Of course.
Right? But you will be following your passion.
I'll be spending.
You will be spending, that's one, but how much you will spend? At the end of the day, you probably would like to do mountain climbing or I don't know what kind of...
Whatever I like, like a passion follow.
So that is the business we are into.
Okay.
Maybe you want to have a charity. So we want you to have your own time. That is what we are building. Okay. And we have already built for many.
So creating wealth for the investors, helping them
retire rich,
retiring,
and then do what you follow, what you like.
I believe you also guide them how much amount you should reach so that you can retire what amount. All those financial planning things.
If anybody asks, we tell. It's our opinion. We're not a financial planner.
Okay. I think those were the questions I wanted to ask. If I have any questions, I'll reach out to in the comment.
Most welcome.
I hope you will answer as soon as possible.
Yes.
But I would love to invest with you. Like, for example, if I have invested 100K, I would love if you had said, no, I will put 900K from my side. But of course, that's not the case.
Anybody says that, that I will
lose my 100K
That's the biggest fraud, in fact. So
yeah, I
please don't
understand
invest
that.
with him. Yeah.
I understand. So yes, I think it was very knowledgeable. I hope it will help the investors who are doing investing and the upcoming investors as well. So that's it from my side. Anything you would like to add
No,
on?
thank you so much. Pleasure talking to you. I hope people listen to this and they develop some wisdom. Thank you so much.